Thanks everybody for tuning in to this latest pop-up episode of Coffee with Bob. You can check out all of our videos on our YouTube channel. Search up Hanowitz and Associates on YouTube, and you'll find us there very easily. Today we're going to be talking about mob investing, which is a very recently popular term. I signed up for Reddit this morning, and I joined that same feed that started this whole thing. So. Not that I'm actually going to participate in it, but I want to be able to understand it and read sort of in real time what can, contribute to this kind of revolution investing. That's how people are referring to it. It's a social media platform, and social media has changed so many aspects of our life, and the way we invest, and Wall Street is by no means, left out of that. Social media has an impact and is continuing to have an impact. So what we wanted to do for you guys today is very first and foremost, explain what's been happening, break it down for you in layman's terms, talk about, the astounding data and, things that have come from it. And then also talk about what can we take from this moving forward. What does this tell us? Not just about specific holdings within our portfolios, but also, where are we in the market cycle if stuff like this is happening? So let's dive into it. Bernie, I want to start off with you. Just give us an explanation of, what is mob investing? And, we can talk about Gamestop. Actually, real quick, I have some really cool data. Gamestop was at 1843 a share. Was that at the beginning of the year?
Beginning of the year,
okay.
January 1st.
Beginning of the year. It's right now at 269 a share. 269 a share. It's so volatile. I mean, year-to-date performance 1,600%. The market cap went from 1 billion to 13.5 billion as of yesterday, and the 52-week performance is 8,000%. It's just incredible. We bring up GameStop because that is probably the most popular example of what is happening right now. So why don't we use GameStop as the example in telling the story of what's going on here?
Sure. Yeah. So thank you all for being with us today. Thank you, Chris. So this, I think is one of the most fascinating phenomenon that we've seen in the markets and really in my lifetime. And it's really, I think, a culmination of the force and power that is now embedded in internet chat rooms and social media in general. The ability to attract a following, if you are a persuasive person on social media, is something to be reckoned with. And that's what we're seeing today with GameStop and some of these other stocks. So let's talk about specifically what is happening on Reddit and other kind of Wall Street related chat boards or trading related chat boards. What you have is somebody or some person or a group of people who have attracted a following, and they are putting out messages that encourage people to buy certain stocks. And in this case, with GameStop and several other stocks, they're stocks that have what's known as a high short interest. And a short interest is essentially a bet that a stock is going to go down in price. And that bet is put on by borrowing stock and then selling it in the marketplace, hoping that it will decline, and then you can buy it back at the lower price and then return it to the person you borrowed it from.
And just to clarify for people who aren't familiar with this concept, you're not borrowing money, you're borrowing the share itself.
You're borrowing stock so that you can sell that which you do not own with the hopes that you can buy that back at a lower price and then return it and thereby make your profit. So shorting is by and large an institutional thing.
It's not something that we implement here.
We never short
considered very
here,
speculative.
It's a tricky business. One of the things that makes it tricky is when you are short a stock, if that trade goes against you, if that stock is rising, then your problem gets bigger. Your exposure gets larger.
Right.
Whereas
Because there's
if
no limit to how high a
there's
stock
no
price
limit.
can go.
Right.
there's
So
no
if you
limit.
sell it at a certain price, but then if you sell it at 30 and then the stock price skyrockets to 260, then you're out that difference.
And that's with
Absolutely.
money, that's with shares that weren't yours in the first place. So your
Right.
liability can be astronomical. In
Exactly.
that case. And that's what we
Because
saw
you
here
have
with
to buy
the
it back.
original
That's the
hedge
thing.
fund. Yeah.
Because you borrowed the share in the first
Yes.
place, you have to buy it back
Yeah.
at some point.
You have to return it.
Right. And that's why these hedge funds are in such a sticky spot right now.
Exactly. And that was, appears to be, the reason why these stocks are targeted,
Mhm.
because they have a high short interest. These participants on message boards identified them as vulnerable.
Mhm.
And this kind of activity has taken place in the past. It's called a short squeeze,
Mhm.
where people will buy a stock that has a heavy short interest in anticipation that the rising price will trigger a need to act
Right.
by the person who's short or the institution who's
Mhm.
short, which would mean they would need to go buy the stock, which would push it up
Further
further.
increases the
Mhm.
price.
Yeah.
Yes.
So this has always been a risk for short selling. But what's different today is just the amount of force and
Mhm.
money that's being applied because of how pervasive the message is and how many people are gathering to
Mhm.
force this short squeeze through these chat rooms.
Right.
Mhm.
So that's the difference between the past and today, and that is the amount of money that's being thrown at GameStop and these other stocks is why they are going up in price so much and so violently.
Yeah.
It
Yeah.
demonstrates a level of sophistication, too, in these Reddit boards. You mentioned that you joined Reddit, and
Yeah.
I mean,
I
it's
don't know what it is. I don't know how it works, but I joined it.
it's the Wild West. I mean, some of the things that are said on there, but there's also a level of sophistication to it too.
Sure.
The fact that they understand, the institutional money has always been considered the quote unquote smart money,
Mhm.
and retail investors less as much.
Mhm.
Having said that, there's a lot of research that had to be done to target a GameStop, understanding the short interest, as you
Right.
said, understanding that it's
Yes.
relatively thin traded
Yes.
as well,
Mhm.
so that a group of people on a Reddit platform of some sort
Mhm.
can all go ahead and do the same thing
Yeah.
and have an astronomical
It's so
effect
true
on
because
the price.
because also to your point,
Mhm.
GameStop, the stock started to turn around a little bit in terms of share price
Mhm.
before it was in the news, like way before. I
Yeah.
think maybe even before the first of the year.
Mhm.
And then what happened was GameStop put out a notice that a new board member came from the company Chewy, which is an online, pet supplies website.
Mhm.
And that actually was the catalyst, one of the catalysts to really help that stock start to skyrocket in price. So to your point, it's not just about sticking it to the man or getting back at, I think
Yeah.
all of these things played their part
Sure.
in helping GameStop
Sure.
get to where it is today. Apologies if I say GameStop. I keep saying GameStop because
Yeah.
we're saying stock and stop,
Mhm.
and it's like a
Right.
tongue twister. But
Right.
it's just it's pretty
There's some of that.
interesting.
If
Yeah.
you read that too, there are some people who certainly revel in getting that win on Wall Street.
Uh-huh.
Is how it's viewed.
Right.
The retail investor
Mhm.
has can tally one against the hedge funds. There's certainly some of that too, but again, there is a level of sophistication to understand what would be an appropriate target. So some people in those chat platforms
Yeah.
are there's fundamental research that's been
Mhm.
done on this stock and others, and it's fascinating to go in there and read
Yeah.
that and understand how much of an effect and impact a group of people
Right.
can have on a stock price.
Yeah, and this is really, in my memory, this is the first time where you have retail investors, just regular folks, individual folks, pitted against an institution
Mhm.
in a short squeeze.
Mhm.
Normally,
Okay.
throughout history, it's
Yeah.
been institution versus institution.
Mhm.
Yes.
And they're duking it out to see
Right.
who, you have one company that thinks the stock is way overvalued, it's going to fall. And you have another institution or group of them saying, no, it's actually cheap.
Yeah.
I'm going to buy it. And they
Yeah.
duke it out. Today, it's,
Mhm.
the average Joe
Mhm.
Right.
30 million of them,
Right.
you know,
Exactly.
versus, you know, an
Exactly.
institution. So
And
It's,
it's fascinating.
It comes down to, you know, over the past 20 years and beyond, and especially more so recently, but there's been this democratization of trading, online trading platforms, no trade commissions, or very, very low trade commissions. And the barrier to entry is so low now. And now that, you know, somebody, you know, can chat with somebody from across the world on a Reddit, you know, platform. I mean, it's amazing. Are we going to see more of this in the future?
I think we will.
Yeah.
I think we will. I mean,
the story's
it's
just
because,
beginning.
yeah, I mean, social media has really changed how we go about every facet of our lives. You know, whether that's good or bad, that's, I think, still yet to be determined.
Right.
Something I wanted to touch a little more on, and Bobby, you mentioned this a little bit, is what is considered the smart money versus the average retail investor. And look, there's a reason why it's called smart money. And that's because these large institutions or these hedge funds, they have the resources to obtain information that we as individual investors, especially someone who's not in the investment industry, they just don't know. So, you know, when they have such a huge short position on a company like GameStop, it's because they foresee that GameStop will be basically obsolete as a company. And I don't know if too many people can argue against that opinion if you look at the fundamentals of the company itself. So my question for you guys is, you know, right now, again, 267 a share. Well, that was as of, you know, a couple minutes ago. Who knows what it's at right now?
It changes by the minute.
You know, are these individual investors putting themselves in a sticky spot? And also, can something like this garner enough publicity to turn an obsolete company around and give them the momentum to change the fundamentals as a company?
A very good question. So, and you raise a couple of really good points. First of all, yes, GameStop has been, I mean, they're in business and they're doing billions in revenue, but they're fighting to stay relevant in a world where they're brick and mortar primarily and in a world that's going primarily digital. So they're fighting, and they have been fighting to stay relevant. So that kind of underlying structure was there at the beginning of this. But the individual investors who banded together to buy the stock and push it up to these heights, yes, they are taking a risk. And the risk is this. It's not likely that GameStop, if they do become relevant, it's not likely that it's worth 260 or 350 or 400 bucks a share. The market was pricing this thing at around 18 prior to when all this started. There's a good chance that, you know, that's probably a pretty good benchmark for what the company should be worth today. And if you're in the market buying at 250, 300, 350, what needs to be reckoned with is the market is eventually going to price this thing back to where it's where it belongs. And so you've got a group of folks who I think, you know, for lack of a better way to describe it, they're having fun, they're making money, they're sticking it to the Wall Street fat cats, but they need to reckon with the fact that, you know, to turn this trade into actual money in their pocket, they need to sell the stock. And that's and that selling needs to occur across millions of accounts in order for these people to profit. And then that's normally the process that takes the stock back to where its fair value is before the value buyers will come in and start buying it.
It's all flows. You're exactly right. It's all flows, so meaning that I mean the percentage of the float or the amount of shares that are on the market that can be traded has been upwards of 300%. So a single share has been traded 3 times in a day. And that is part of what's driven the price up, because there's, you know, more perceived demand, which means the price is going to be higher. And, you know, in short, to summarize what Bernie said, when the music stops, you don't want to be the one without a chair.
Exactly. There inevitably will be a nice chunk of people who are going to get hurt from this because they get in too late.
That same self-reinforcing cycle that causes the price to go up, eventually that's going to turn and it's going to be self-reinforcing on the way down.
Well, it happened a little bit back on Thursday when, and I think this was when Robinhood first put limits on trading, and the stock price went down 40% very, very quickly. Now, I mean, it recovered the next day, but still it just goes to show you how quickly it can turn around based off of, you know, a news article, not the fundamentals of the company itself. So.
You're right. So that's a good point, and it highlights the fact that this is a sentiment-driven phenomenon.
Yeah. People are nostalgic. I remember going to GameStop.
Yeah.
Dad used to take us to GameStop
I
to get the
remember
Mario
those
Brothers video games.
Oh my
So-
gosh, like the old days. But the question is too, I mean, this thing is so fascinating, guys, seeing what's happening here.
Yeah.
The question is that I think a lot of people are going back to is what does this mean for the broader markets? What does this mean for the average investor
For sure.
who's not, you know, speculating in GameStop? I almost said GameStop. What does it mean, you know, for the market as a total?
Yeah.
What do you guys think?
Yeah. So, you know, so far this is localized. I mean, this is a new phenomenon, and we'll see where it goes. But so far, it's localized to a pretty small group of stocks. So at this point, it's hard to imagine a scenario where this spills over into other into being a systemic problem for the market in general.
Or for an individual's portfolio too.
Yes.
Right.
So if you think back to, say, the late 90s, where valuations in general in the market got pretty high, but among a certain sector, the technology sector, and in particular internet-related companies, the valuations were astronomical. Now, if you were concentrating your portfolio in that sector, you got hurt pretty bad. But if you were invested in a diversified manner across a portfolio that owned all the, you know, just owned essentially a cross-section of our economy, then yeah, your portfolio went down in 2003, but at the end of the day, you were fine. And it feels today like, look, if you're going to invest in GameStop and Express and Chico's and American Airlines and all the other companies that are involved in this, you're taking on some risk and you might have a long-term problem. But if you stay diversified in a cross-section of our economy, you're likely to be okay.
Reason number 346 to have a diversified portfolio, ladies and gentlemen. We can't come up with enough reasons. So. Yeah, no, that's so true. And to your point, they're already moving on to AMC to silver. Silver's the newest one.
Silver's the new one.
I mean, does it change at all if it's a commodity versus a share in a company?
Commodities have short interest as well.
Yeah.
So I have to admit, before this video, I did not have time to research the short interest in silver, but my sense is there's probably a substantial, silver's been on the rise for some time, which attracts short sellers if they think it's overvalued. My sense is there's probably a decent short interest in silver, and that's why they moved on to this.
I think that makes sense. I think it's interesting for me because I always understood that, yes, these individual investors are banding together to get back at Wall Street, stick it to them. But at the same time,
I think they want to make money too.
Agreed.
Yeah.
But at the same time, they're also supporting a company that they're maybe a little nostalgic for, like GameStop. Whereas silver, you know, what company, you know, what nostalgia are they supporting? They're not really. So it's just very interesting to see, you know, what the trend moves towards, you know, next. It's just very interesting. I mean, I don't know if this is a fair question to ask. This could be such a speculative question, but when do you guys foresee the volatility and all the news around GameStop? Let's keep using GameStop as the example. When do you see it kind of going away? I mean, could it go away as quickly as next week? If there's a bigger, better company that takes up, you know, more publicity, or could it be here to stay for a while? I mean, does it really depend on how much money is in people's checking accounts and to keep, you know, putting into their Robinhood accounts? I mean,
short squeezes like this, I mean, this type of phenomenon doesn't typically last for a long time. I believe which auto was, I think it was Volkswagen actually, that during around the time of 2008, there was a short squeeze on that stock and it temporarily became the most valued stock in the world, largest market cap in the world. And then as, you know, just as quickly as that happened, it was, you know, back down to its original price.
right.
And I mean, hey, who knows what the future has to hold here, but the history of short squeezes is that it's a temporary
Yeah.
it's a temporary phenomenon, and hey, at the end of the day, over the intermediate to long term, we know that stock prices tend to track their earnings.
Revert back. Yeah.
Tend to track their
Absolutely.
earnings.
But your question does raise a point that I think is true. What we're seeing could be a sign of the times.
Mhm.
This trading it usually happens after a period of market outperformance, where stocks have been going up quite a bit, where there's a lot of liquidity in the system. There's some market commentators who are throwing around anecdotal comments that, a lot of the money that's finding its way into these investments is stimulus money. This is,
Yes.
this is,
What does that tell
GameStop is
you?
being driven up $700 at a time,
Right.
per account, because there's a lot of folks who have some money in their accounts that maybe they didn't have a few months
Yeah.
ago, and they're don't necessarily need it to pay the bills
Yeah.
this month, so they're speculating. So that
What does that tell you about the stimulus? And what does that tell you about where we are in,
it raises some
it's a loaded
questions.
question.
It raises some questions
Yeah.
to which there may be some very difficult answers
Yeah,
for
absolutely.
us to reckon with.
Yeah, for sure.
Certainly.
That, I'm glad you brought that up, because that's sort of how I wanted to round out the discussion is, most importantly, how does this kind of information, what can we take from it, and what does it tell us about where we are in the cycle? And it definitely is a lot of speculative activity, compared to the typical kind of activity that you see in the markets for individual investors. And yes, Bernie, to your point, a lot of people, they're in it to make the money. I mean, there was an article I was reading actually earlier this morning, and I forget which publication it was from, but they interviewed some people who remained anonymous for privacy purposes. And, one person took that money and paid off debt. Another person took that money and helped his mom put a down payment on a house. Another person took that money and she blew it on herself and her spouse. A couple, they made some money and they can finally start planning for a wedding. So it is pretty incredible to follow this story and see what continues to come from it. But I think that might be a good place for us to leave this for right now. And as always, we encourage you guys listening in and tuning in, reach out to us if you have any questions about this and about, really any questions you might have. It's a very interesting topic. Thank you for tuning in to this episode of Coffee with Bob. Be sure to check out our YouTube channel, and we'll see you next time. Thanks, everybody.
Thank you.
Thank you.